Okay, so listen, listen. Last class we saw all the business plan, what all content should be there in a business plan document. Last class we covered that. Today we will see what is marketing plan, what is production plan, and what is financial plan. These three plans are very important. The entrepreneur has to prepare it very carefully when he starts his venture. So first we will see a marketing plan when it is nothing but a blueprint of all the marketing activities that he is planning to do. So what are the strategies? What are the objectives? What all functions he will do in marketing? All that is mentioned in the marketing plan. So it is a formal written document and it is written by product managers or product line managers or channel managers or the managers of various distribution channels. It will be or various customer groups. They will be preparing this marketing plan. What do you mean by product line managers? What is a product line? See, when you have a product, the different varieties in that product. Suppose if you take Lux soap. So in Lux soap, there will be so many varieties. There will be herbal, there will be rose, there will be lavender, so many things will be there. So all the varieties in one product is known as product line. It is known as product line. So if you take like for example Colgate toothpaste, there are so many varieties in that. Salt is there, herbal is there, something so many different coal something and all varieties are there in Colgate toothpaste. So that is the product line of that Colgate product. So there will be a manager in charge for that entire product line. So he is the person who will be preparing this marketing plan. So marketing plan is has to be done very carefully. It has to be planned. It will tell who are the targeted customers, what is the competition in the market, what are the strategies, marketing strategies, what is their budget, most important, what is their budget. So this is in the marketing process, the most important outcome. One of the most important outcome is the marketing plan. So now we'll see what are the elements in the marketing plan, means what all should be there in a marketing plan. So marketing plan should have executive summary, it should have situation analysis, it should have SWOT analysis, it should be having financial analysis, external environment analysis. All these things should be mentioned in the marketing plan. So executive summary means it is the first component, first thing which should be mentioned in the marketing plan. Sometimes it's mentioned in the beginning, sometimes it is mentioned in the last. So it's just a summarization. It is just a brief about all the marketing activities that the venture is planning to do. So what are the products, which is the target market, what is the budget, what is the advertising budget, everything. What are the goals, what are the objectives, everything will be mentioned over there. So the second element in the marketing plan is situation analysis. That is analyzing the situation. There are three environments which an entrepreneur should analyze. One is the internal environment, second one is the external environment, and the third one is the customer environment. So the entrepreneur has to analyze all these three environments. Internal means within the company. So within the company, what is the availability of human resources? What is their skills? What is their knowledge? What is their capabilities? What is the financial resources available with the company? What is the equipment they are using? What is the technology they are using? What is the condition of the equipment? All these things they will analyze in the internal environment. Customer groups means they will collect all details about their target customers. which area they are located, what is their age group, what is their occupation, what is their education level, all demographics about the customers, what is their purchase style, what is their lifestyle, what kind of lifestyle they are leading, what is their purchase behavior. So everything, all details about the customer group which they are targeting. They have to collect that information. Then the third one is the external environment. External environment, we have already studied macro environment. That is pestle, political, economic, social, technological, yeah, all that pestle environment. They have to collect all the data of the external environment. And then this is the second element in the marketing plan. Third element in the marketing plan is the SWOT analysis, that is strength, weakness, opportunities, and threats. So, what is the constructive parts like of the strength or weakness? What is the destructive, that means negative points and positive points of strength, weakness, opportunities, and threats? They will mention. So they will see strength and opportunities come from where? Within the company or outside the company? Strength and weakness within the company, and opportunities and threats are outside the company. So they will collect the positive points and negative factors of both these: strength, weakness, opportunities, and threats, and they will see whether it is a good environment to do their marketing activities. Strength is more or weakness is more, then weakness is more or threat is more, means they have to overcome it. They have to plan strategies on how to overcome the weakness and how to overcome the threats. So this is the SWOT analysis. So this external environment is an environment over which the company has no control. Well, what is happening in the economic environment, what is happening in the political environment, company has no control over that. So external environment, company has no control, but internal environment, company can control to a certain extent. What kind of human resource they are taking, what should be their budget, their financial resources, their infrastructure, their equipment, their technology, all this, the production process, procedures, all that they have some kind of control over it. So internal environment, they have some control, but external environment, they have no control. So the next element in the marketing plan is the strategy, marketing strategy. So they, whatever marketing strategies they have planned, they will put it in the marketing plan. And what is the objectives, what is the goals, what is the mission, vision, statement of the company, which is the target market, what is their needs, what is their likes, dislikes, everything will help them to determine the marketing strategies, what kind of marketing strategies they should come out with. So like for example, if you are marketing to premium customers, that is upper class customers, then your marketing strategies will be different. If you are marketing to the lower level customers, that is below the poverty line, below the pyramid, they say, kind of customers, then your marketing strategies should be different. So depending on all these factors, you will determine your marketing strategy. Then the next element in the marketing plan is the financial projection. Financial projection means you are predicting what will be the financial expenses and revenue, everything you will be predicting for the future of that company. So 1 year or 2 year or 3 year, you will do the financial projection. So based on the past, what were the past figures that you had, accounting figures, how much sales you got, what was the cost of your production, cost of producing those goods. So all those past figures, based on that, you will do projection for the future. You will do financial projection for the future. So what is Bhumika doing, looking down? Mobile from that time? Writing notes. Okay. From that time you are looking down. So the last element in the marketing plan is marketing control. Marketing control means it's the last component in the marketing plan. So here they will set their standards. They will tell what is their standards for achieving sales, for achieving this much revenue, what is the standard for achieving production volume, what is their standard. So all the standards will be mentioned and the actual performance will be compared with the standards, and then they will see whether there is any difference. If there is any difference between the performance standards and actual performance of the company, then they will do some corrective actions. They will take some actions to try to correct it. So this is basically having a control on the marketing activities. So how they are going to control the marketing activities, how they are going to make sure they will achieve the marketing outcome, how they will make sure they don't go outside the budget, how they will make sure they make use of all the resources which they are going to be applying in their marketing activities. So all this will be mentioned in marketing control. So these are the elements of the marketing control. So now why marketing plan is important? Why it is important? Because it gives a direction to the marketing managers. So the marketing managers will know how their products are moving in the market, whether they are achieving the sales, whether they are achieving the ROI. So which product is going, which product is not going. They'll remove the unprofitable products from the market by looking at the marketing plan. So marketing plan is just like giving an overall guidance to the managers and make sure they achieve the organizational goals, make sure they are achieving the mission of the company. So all this they can find out through their marketing plan. Second reason why marketing plan is important, it will tell you whether you are achieving your marketing goals, whether you are getting the ROI, whether you are getting the revenue, it will tell you. So if you are not achieving, then it will tell you where you are going wrong so that you can take corrective action. And also the marketing plan helps you to analyze your business environment. What is your external environment? What is your internal environment? What change has happened in your targeted customers? All these things you can find out through your marketing plan. And you can also come up with various tactics. Tactics is nothing but actions. What actions you will take to target your customers successfully, or to achieve more sales of your product, or to achieve more production volume, or to increase your advertising, increase your promotion. So what are the actions or what are the tactics you will use? So for all these reasons, marketing plan is very important. So it is like a guidelines. It is like guidelines for the managers. So next we will go to the financial plan. Financial plan is nothing but you are preparing a plan for your future expenses. You are planning your future income. So you are preparing it in a form of a document. You are planning what will be your expenses in the future, what will be your revenue in the future, or what will be your income in the future. So you from looking at the financial plan, you can come to know whether you need to borrow money to run your business, or whether you have extra money in hand, then you can invest it in other businesses, or you can invest in launch a new product, you can start a new product. So by looking at the financial plan, you will come to know the financial position of the company, whether it is a sound financial company or whether it needs to borrow cash from outside, it needs to take funds from outside. So these are the elements of the financial plan: cash budget, working capital, income statements, cash flow statements, proforma balance sheet, and break-even analysis. So these are all the elements of the financial plan. So take down all these elements of the financial plan. Nothing. You don't want to take down. You took down all technology. Hmm? tech savvy. So next week we will start presentations from Monday. Okay. No group, individual. Individual. Topic I have already discussed. Entrepreneur. You are not there in class. Any entrepreneur. Okay. So Krishna, your name first. Monday. Hmm? So Shreyas, Mohit, Krishna, 5 persons will do the presentation. Yeah. What's your name? You're smiling. Sharad. You will come on Monday. You're smiling. Ah, that's why. So Shreyas, Mohit, Krishna, and Bhumika. Now only. She's ready. Just 10 slides about an entrepreneur or about a business. That only I am telling. Entrepreneur. About an entrepreneur or about a business. Ah, you do like case study also. Yeah. You can do like case study also. Hmm. You can do like that also. Okay. So Monday all of you, 5 of you are doing. Sharad, if you don't come, no, 0 marks for your presentation. Okay, so first one we will see cash budget. Cash budget is nothing but a statement for a particular time period. They will calculate how much payments they will get, they will make, and how much receipts. That means how much money they will receive. So how much money they have to pay and how much money they will receive in a particular time period. Like for us, financial year will be every time March, the month of March. So from previous March to the next year March, that is our time period. So during that time period, what is the payments and what are the receipts, that is prepared in a statement that is known as cash budget. So cash budget, looking at that cash budget statement, you can come to know whether the company has enough cash or whether it has to borrow from somewhere. And second one is working capital. Short form is WC. Working capital means whether the company has, yeah, the capital to do their production, whether they have the capital to run the business. So again, it will contain what is the inventory, who are the debtors, who are the creditors, like whether somebody owes you money or whether you have to pay money to somebody. So all this will be mentioned in the working capital. So if the working capital is managed efficiently, then the company need not borrow. They can manage their business without borrowing. So by looking at the working capital statement, you can come to know whether the company is productive or not. So there are two things in the working capital statement which is mentioned: current assets and current liabilities. So both should be managed well so that there is a balance between the two. So also working capital is also known as revolving capital or circulating capital. That means whatever money you have earned, you are putting it back into the business. So that is why it is called revolving capital or circulating capital. Whatever you earned, you put it back into the business. So this is the second element. Third element is the proforma income statement. This is nothing but your profit and loss statement. So it is showing you, this statement will tell you what is the profit and what is the losses and what is the future. It will tell you what is the future income. So a financial analyst will usually analyze the overhead cost, how much it costs them to pay wages, how much it costs them to do purchases. So he will analyze all that and he will be able to prepare the income statement. So next one is proforma cash flow statement. Cash flow statement is nothing but how much cash you are using to run the business. Yeah. So how much inflow of cash is coming and how much outflow of cash is going. How much cash is coming into the company and how much cash is going outside the company. So it will mention all the details like how much you are paying to suppliers, how much you are paying to employees as salaries, how much interest, how much dividends. All these things will be mentioned in the cash flow statement. Then next you have the performer balance sheet. Performer balance sheet is also a statement which is showing the assets and liabilities of a company. So usually it is prepared in the last day of the accounting year. It is prepared. So by looking at that statement, they will come to know how much assets and how much liabilities are there and what is the difference between the two. Whether assets are more or liabilities are more, they will come to know by just looking at the statement. Then last one you have the break-even analysis. Break-even analysis, all of you know what is BEP, break-even point, right? Yeah, no profit, no loss. So this is a break-even analysis is analysis of this break-even point. They will do extensive analysis of their cost, how much cost they have incurred, how much was the volume of production, and how much profits they got. So by analyzing cost, volume, and profit, they will come to know whether through the break-even analysis, they will come to know whether the company has reached a break-even point or whether it has reached beyond break-even point either into profits or either into losses. So at a particular level of production, what is the cost, what is the price of the goods, they will calculate the break-even point. So these are the elements in the financial plan. Then we'll see the importance of the financial plan. Last topic. Importance of the financial plan. Why it is important? It helps the entrepreneur to manage his cash. He will come to know which period his income is more, which period his income is less. So when the income is less, he will plan his expenses. He will not do unnecessary expenditure. He will do only important expenditure. So cash management becomes easy for the entrepreneur if he has a financial plan in hand. Second one is long range. He can plan his long range finances. Usually entrepreneur will be thinking always short term. The short term cash, how to manage, short term profit, short term expenses, cost, everything he will be thinking. The problems, crisis, everything he will be thinking. But he may forget to think for long term. So this financial plan will help him to plan his finances for the long term. Long term, how much revenue, long term, what will be my cost, long term, what will be my ROI, so what will be my assets, what will be my liabilities, all that he can plan with the long term viewpoint if he has a very good, well developed financial plan. Third one, he can spot the trends. He can find out what are the trends. Like suppose in a market, if he increases advertising, then he will get more sales. So he can, if he spots that trend, he can do that same thing in his business. He can do more advertisement, he can do more promotion so that he gets more sales of his products. So like that he can spot some trends. What are the trends in the market? Another benefit is he can prioritize his expenses. That means he can plan and see which expenses are most important, which he has to give, and which are the not important expenses. So he can plan which are the most important expenses, he will carry it out, which are not the important expenses, he will delay it till he gets more income in hand. So he can prioritize his expenses. And the last benefit is he can measure the progress of his company. whether financially his company is progressing, whether it's becoming stronger financially, or whether it is going down. He can come to know through his financial plan. So these are all the benefits or importance of a financial plan. So I'll stop.